Welcome to the channel, ladies and gentlemen. So, in this video, we are going to talk about the secrets to getting approved for business credit and financing. We're also going to talk about the types of financing, approval secrets, and more. So, make sure you watch this entire video because this video is going to give you a lot of information and a lot of value in a short period of time. And if you want to see more videos about all things personal and business finance, make sure that you subscribe to this channel, hit the bell icon, and then hit that drop down on that bell icon and select all notifications so that you do not miss a video. So let's get right into it. So we're going to start off with the types of business financing. So a lot of people may not know all of the different types of business financing out there. We're going to cover a good amount of them in this video. So we'll start off with credit lines. So we'll start off with credit lines. A lot of people already know what credit lines are, but I'm going to give you some information on what it takes to get a line of credit for your business. So, of course, most business owners want access to credit lines. They also are one of the hardest types of financing to qualify for, especially business lines of credit from banks and credit unions. Now, there are alternative business lines of credit from alternative lenders that are easier to get than the ones from directly from the bank or credit unions. So, to get approved for real credit lines, you must apply business financials in most cases. So, with alternative lenders, sometimes they may not even ask for tax returns, they may just ask for like 3 months bank statements or 6 months bank statements. And a few examples are going to be On Debt, also Blue Vine, and Fundbox. Those are alternative lenders who don't really ask for tax returns. So financials include your tax returns for about 2 years when it comes to getting business lines of credit most of the time from banks and credit unions. Now, this is not for every single bank and credit union, but a lot of them will require tax returns. If you are a new business and you just started, you still can probably get a small line of credit for say 10 to 20,000 without showing financials. If you already have good personal credit and you have similar lines of credit showing up on your personal credit. Also, they might ask you for a profit and loss statement for both current and projected and bank statements. And sometimes they may ask for a business plan. Also, your personal and business credit will be reviewed a lot of the times. Now, if you do not have business credit established already, they're going to mainly look at your personal credit history. They're going to check to see if you have lines of credit on your personal credit profiles, how long you've had them, the limits and everything. So both should be good to get approved. If you already have business credit established or you may have some business credit, you need to make sure that that is in good standing. Lenders like to see that you have open lines of credit with very high limits. Also, really quickly, if you would like to get help with getting business credit and financing, we currently are having a 50% off sale on our software and coaching program that will help you with establishing strong business credit reports as well as getting approved for all types of business financing, anything from SBA loans to term loans to lines of credit, equipment financing, vehicle financing, EIN only, business credit, and more. You would also receive 4 exclusive bonuses as well as our business credit blueprint. We help you with optimizing business credit and personal credit. We teach you everything you need to know to get approved. We give you underwriting requirements. We give you information for different bank issued credit cards. You get 12 months of coaching and more. Link will be down in the description box below. If you're watching this video after October 2nd, the 50% off sale is going to be over, but we will still have this available for you. And the page may look a little bit different from this, but if you want to get started with us, our contact information is on this page. If you have any questions before ordering, again, this is 50% off until October 2nd. Link will be down in the description box below. Now, when it comes to loans, business loans are available at a lot of places, including SBA loans offered by conventional banks. Now, recently, the SBA has kind of loosened up some of their requirements for their SBA guaranteed loans up to 500,000. So it has become a little bit easier to get an SBA loan, and many loans are shorter terms, such as 3 to 5 years. Others might go up to 20 years or longer. Rates vary based on risk, with some being 2% over prime rate and others being as high as 35%. To get longer term loans, you will almost always need financials and in many cases, collateral. So the next type of financing are advances. These are either revenue based or these are merchant and revenue advances. And these are pretty popular because they're fast and quick to get. But to me, these are one of the least these are one of the least favorable types of loans to get because they usually have higher interest rates and they are usually for people with bad personal credit that can't really get anything else. So this is like the last resort type of funding option. I would only say get one of these types of loans if it is truly an emergency and you don't have any other option and you know you're going to be able to pay it back very quickly, because if you stretch these kinds of loans out, you'll end up paying way too much for them. So these are like cash advances or payday loans in the consumer world. And if you know anything about those payday loans, like I said, they have extremely high interest rates. And so it's the same thing on the business side. What they do is they purchase your future revenue. So they advance your future revenue just like they would advance your future paychecks on the personal side. Of course, they're much easier to get than loans and lines of credit. Most of the time, you don't have to show tax returns. You'll only have to show like 3 months of bank statements. They're very quick to get. You can get them within a couple of days. The terms aren't as favorable. Like I said before, they are usually going to be high interest rates and they usually want you to pay it back like within 3 to 6 months. Now let's move on to credit cards. There are a few types of credit cards you can get for your business. The most common credit cards, most of these credit cards will work exactly like consumer credit cards do, but with additional benefits. They provide benefits depending on the type of cards you get. So the first kind is going to be the no PG, no personal guarantee type of business credit cards. These are going to be strictly based off of your business credit reports, and they do not require a personal credit check. You can get credit cards from different places. They can be Visa and MasterCards. They could be store cards. They could be gas cards. Now, when it comes to getting the no PG Visa and MasterCards, you're going to have a lot of the times, at least 10 business credit accounts reporting on your business credit reports and have good business credit scores of 80 or higher. These card limits will mimic your current highest business credit card limits. Sometimes the rates can be like the consumer cards. Of course, no personal guarantee is required. Now, examples of some business credit cards that can be used anywhere, such as a Visa or MasterCard, no PG business credit card, would be the popular Sam's Club Business MasterCard. And believe it or not, you can get high limits on those cards. It's going to depend on, like I said, your business credit profile, how many accounts you have on there, and the limits that you have on there. So that's why you want to request for limit increases on the business credit accounts that you have so that you can then go and get MasterCards from, example, Sam's Club and get $20,000 to $50,000 limits on those cards. I've seen people get up to $50,000 limits on those Sam's Club MasterCards. So it is very possible. You just have to know what you're doing. And you have to have a good amount of accounts reporting. A lot of people go and get the Sam's Club MasterCard with only 3 or 4 limits or 3 or 4 business credit accounts reporting, and they get a low limit. And that is because, like I said, you need to have more accounts on there to get higher limits. Now, there is the PG business credit cards, and these are the cards that you can get from the big banks. You can get these from local credit unions, but you're going to have good personal credit. And a personal guarantee means that they're going to use your personal credit to approve you. You're going to get an inquiry most of the times on your personal credit profiles. And if you default, you're going to be personally responsible for that business credit card, and it also may report on your personal reports. So you need to have great credit with low utilization and not very many inquiries within the past 6 to 12 months. You can typically get 5 times more than the current personal credit cards that you have reporting on your personal credit reports. You can get 5 times more on the business side. So if you have, for example, a $5,000 limit on the personal side, you can potentially get $25,000 on one business credit card, and then you can go to another bank and get another $25,000, and that's going to total $50,000 in credit limits for your business. These cards usually only report to the business credit reporting agencies. Now, some business credit cards may not even report at all, and some actually report to your personal credit. And those are the ones that you kind of want to avoid, because if you use up those limits on those business credit cards, it's going to show up on your personal credit and drop the scores on your personal credit because of that high utilization. For example, one of those is going to be Capital One. Their business credit cards report to your personal credit. So you want to be careful with those. If you don't mind, you can probably start off with one of those cards so they're easy to get approved for. All right, so let's talk about the approval secrets. So let's start with your company name. So if you are just choosing a name, try to choose a basic name or a generic name that is not going to place you in one industry, especially a high risk industry. There are a lot of industries that fall on the restricted list. Your name can allude to an industry you are maybe in or maybe not even a part of, and this can affect your ability to get approved. For example, the name Elite Credit got a bank account shut down just because the name led the lender to believe that it was credit repair. Also, another industry specific name that very well might restrict your ability to get money with some lenders or some lending sources and credit issuers. So Elite Consulting would be better than Elite Credit, as a general consulting name does not keep you from getting credit or loans. And usually consulting is not considered as high risk. The more generic the business name, the better your chances are of getting money. Now, when it comes to the phone numbers, you want to make sure your business has a phone specifically for the business, and that is not a personal home phone or a cell phone. You can use very cheap sources to get a business phone number. For example, Grasshopper has a solo plan that starts off, I believe, at $15 per month. Also, GoDaddy also has a phone plan that you can get for your business. All you have to do is download an app on your cell phone and use that as a second line. And I believe they start off at $9.99 per month. Or if you plan to do other things that require you to have like video sales calls, or maybe you need a fax number, places like Ring Central is very good for having additional features. You can download apps on your phone as well as on your computer to manage your phone system. And believe it or not, lenders know whether you are using a cell phone number or an actual real business number or a home phone. They have systems and technology that can pick that stuff up. It's built into the automatic underwriting software that they use, especially when you are applying online. So do not try applying for any money or any credit cards without a real business phone number. Voice over IP numbers are okay. Also, you should have a toll-free number unless you only deal with local businesses or a local business. So if your customers are mainly local, like for example, a restaurant, or a local boutique. Otherwise, you should probably use a toll-free number. Also, get your number listed in the 411. Try listyourself.net for a 411 listing. Now, let's move on to another part of the approval process that can actually help you get funding is being a homeowner. So being a homeowner increases your chances of being approved. It shows a greater level of maturity and responsibility. Plus, it shows you can manage a higher monthly payment. And also, your home might even be used as collateral for some financing, such as SBA loans. So you can use your home as collateral for a larger loan. That brings us into assets. If you have any assets that can also be used as collateral, lenders love assets. So when you are asked on an application about the assets you have, what the lender is really looking for is what you can use as collateral for debt. The more collateral you have, the better chances you have of being approved with many types of financing. SBA loans require the lender to take all the assets you have in your business as collateral, and if it is not enough, they may use personal assets as collateral. Some lenders, such as advanced lenders, don't need collateral. So like we talked about earlier, is the revenue-based or merchant cash advance types of loans or financing. Those do not require any collateral, because essentially it helps them feel more secure in lending you money if you have assets to show. Many things can work as collateral, such as your 401k and stocks, real estate, inventory and equipment, purchase orders and receivables, and other items that are easy for a lender to sell and get their money back in a case of a default. Also, time in business. The longer you are in business, the better chance you have of getting approved for almost all types of financing. Now, that's not to say that you cannot get approved for any type of financing if you are a startup. The most common ways to get approved for startup financing is going to be through business credit cards. Those are easy to apply for, and you can use projected income. This is because extensive statistics show that the majority of businesses fail early in the early years, such as 3 years or less after being open. The longer a business is open, the more their chances of failing declines. So longer standing businesses have much less risk of going out of business than new businesses. Also, being open less than 1 year makes it a little tough to get financing, other financing besides business credit. You can get unsecured personal and business credit cards with no issues, but advances are tougher and loans are hard to get as well if you don't have any revenue and you haven't been in business that long. Some business credit vendors, stores, and cash credit sources also might not approve you if you have been open for less than a year. That's some, not all. So 3 years or more is what sources prefer. This is part of the reason the SBA requires 2 to 3 years of financials. Okay, so average revenue. Most lenders issuing loans and lines of credit will require tax returns on top of profit and loss statements and bank statements to verify income. They want to see consistent revenue. Your tax returns must show good profits. The amount you show will determine the amount of money you are approved for. And again, we're talking about business loans from larger banks, and a lot of the times some credit unions, they will ask for this information if you're looking to get larger loans and larger lines of credit. You need to show increasing profits from year to year, not declining profits or negative profits. Declining profits are a sign of trouble, and lenders will shy away from business owners who are not profitable. Also, the industry you're in is very important. So there are many high-risk industries lenders don't prefer. The list of high-risk industries is different for each lender and funding type. So keep that in mind. Some lenders have been burned by one type of industry and have blacklisted it, while other lenders offering similar products are okay with that industry. So you have to know what lender to work with. And of course, that's where we can help you out at, is we can help you with placing you with the right lenders. We are partnered with different lenders who can help you get funded. and we know their requirements. And some industries are almost always seen as high risk no matter what lender you apply with, like the adult industry or credit repair or gambling. Other industries such as financial services are restricted with many lenders, but not all. Financial services can include credit repair lenders, accountants, insurance agents, mortgage brokers, realtors, and any other type of business dealing with financial transactions. Always ask upfront if the lender views your industry as high risk. Now, really quickly, we're going to get into the personal credit scores. No matter what you are told, personal credit always matters unless it isn't being looked at all. For example, when you're applying for business credit, you can use your EIN to get approved and leave your social off of the application. Now, this is business credit that does not require a personal guarantee when you're first starting out. But when you get into doing a few $1,000,000 a year in revenue, you can actually get business credit from places like American Express without having to use yourself as a personal guarantee, because your business will be able to stand on its own with that type of revenue and with you having strong business credit profiles. But that is about the only exception in the business funding space. All other funding types including advances, look at and care about your personal credit. Yes, you can get approved for cash flow financing and merchant cash advances with bad credit, but your repayment terms will be extremely high. SBA loans, conventional loans, and most other long-term loans and credit lines do require good personal credit for approval. In most cases, collateral and asset-based financing doesn't care about your personal credit because they are going to use that collateral to repay the loan if you default. And then your business credit score. So there is no FCRA for the business world, so lenders will never disclose to you that they pull your business credit when you apply for business financing. You're only going to know if you have business credit monitoring services such as NAV, or if you have an account set up with DMB, you're able to see different inquiries on the DMB dashboard when looking at your Paydex score and your reports. But they will pull your business credit. A lot of lenders will pull your business credit. They won't tell you, but they will. A lot of banks pull your business credit when applying for credit cards, but if you have strong personal credit, it doesn't even matter if you don't have business credit at all. But if you have both, you'll get better approval rates, you'll get higher limits if you have both good business credit and personal credit. So just think, you are applying for money for your business, and your business credit has its own profile and score. So of course they will want to see how the business pays its bills on top of how you do as a owner. Not having established business credit makes you look like a rookie, a startup, or a not established business. That could lead to denials. So ensure that you have at least 5 to 10 reported accounts on your business credit reports showing paid as agreed. If you need help with that, again, that's where we come in. The link is going to be down in the description box below. So now we're getting into bank credit, which is also known as a bank rating. So you have 3 types of credit. You have personal credit, business credit, and then your bank credit. All 3 should be in good standing for the best chance of approvals. Your bank rating is mostly based upon the amount of money you keep in your bank account over the last 90 days. A high 5 account balance is going to be 70,000 all the way up to 100,000, and then mid 5 is going to be 40 to 70,000. Low 5 is going to be 10 to 40,000. A high 4 is going to be 7 to 10,000. A mid 4 is going to be 4 to 7,000, and then the low 4 is going to be 1 to 4,000. Now, when it comes to funding approval timeframes, the higher dollar amount loan or line of credit that you want to secure, the longer it's going to take for underwriting to approve the application, no matter what type of financing you're applying for. Loans usually take a while to get approved and get funded. Credit lines can also take a long time as well, except through fintech companies or alternative lenders, again, such as On Deck, Blue Vine, Fundbox, just to name a few. Advances are fast. You can get that within a few days. Credit cards can take up to 3 weeks, but most of the time it'll just take a few days for you to get approved if there is manual underwriting involved. If it's a credit application online, a lot of the times it's going to be instant if you do everything correctly. If your business is set up correctly, where they can instantly verify your information through their technology and their automated systems. It could be an instant approval. Sometimes they will review the application because some of your information doesn't match up. And so they'll manually review your application, and that could take days or it could take a week. Due diligence checks, all lenders will do a due diligence check on you and your application. They will check if you have other outstanding loans you neglected to mention on your application. This is if you're doing a manual application. A lot of times in the bank with a branch manager or a business banker. Also, they will check to make sure your lease or your mortgage is in good standing. They will check if you are going out of business, and they will also look at your reputation online. The purpose of this check is to find hidden risks that they could not find on the application, and the other purpose is to see if you left any information off of the application intentionally. And then some may even look up your address. They may look up your entity filings. A lot of times if you're doing credit applications with smaller credit unions, sometimes they do manual underwriting and they will go do research on your business. They will see if your entity is in good standing. They will look up your address to see if it's a legit address, to see if it's linked to a real office or a real storefront or a real legit building and not your home or not a address that may be linked to like a postal location or a pack and ship location or a Staples shipping center, because some of the addresses that are resold online for business purposes link to those types of addresses, and that makes businesses look very unprofessional. These checks usually take 1 to 3 days.